Hello and welcome back to our YouTube tutorial. Today we are going to discuss how you can catch spikes on boom and crash, and we're gonna use an indicator called Bollinger Band and a price action candlestick pattern called rejection. So we need a rejection for crash. We need a rejection on upper band like here. So on my number one, so you need a rejection from the upper band, rejection or a kind of candlestick pattern. Can see also this a rejection. Then another thing, this rejection has, this candlestick has to close, because this crash, so it has to close bearish. Okay, so it has to close bearish, then you enter on the next candlestick. So like for example on number one, so here is our entry. So when the candlestick closed, remember this 15 minutes time frame, so when the candle closed, so you enter a sell. So you are targeting 1-to-1, or you are just getting out with any spike you will get out. So any spike, get out, or just wait for more spikes. You can go with 1-to-1 risk to reward ratio. So like for this case it was 1-to-1. Okay, so that's a nice way of catching spikes. Let's see example 2. Example 2, the same. So when this candlestick closed, you can see when this candlestick closed, you sell. Then you can close, you can decide to close within the next 15 minutes because we are targeting the next candlestick before the market reverses up. So we are catching a spike. So maybe this huge candle here, it was one spike, okay, or 2 or 3, but our interest here, how to get in profit with those spikes. So where do we put our stop loss now? Our stop loss put above this, above the candlestick that led to the rejection. So that's where you put your stop loss. Like in this scenario, your stop loss could be around here. Then remember, you can get out with 1 spike, 2 spike, or you can go with 1-to-1 risk ratio. Another one was here. So you can see this also a nice rejection. The market opened here around this level, then it went back up, and then it was rejected on the upper Bollinger Band. So on the upper band, so it crashed. So you just sell. It went against us. Okay, if you know how to add position, you just add another position there, and then market crashed back down, then you close your profit. If you are going for 1-to-1, then you could avoid a little bit, but in this case you are catching spike. Don't go for big risk to reward ratio, just 1-to-1 or close to that, get out. So I'll go forward and see some few setups. So there are some few setups that I highlighted. Okay, like this one. Sorry, like this one. Though this is not a nice rejection, but still could have worked. We go back, then this one here, you can see when it happened, the market later crashed back down and you collect your profit. Okay, and remember to put your stop loss. It can still also go against you. I could also consider this one here. That's nice rejection after this divergence. I think there is a divergence here, so that's also a nice one. So you get your profit there. You wait. Remember, the candle has to close bearish. This is crash. The candle has to, we are catching spike. Okay, for crash it will spike down, for boom it will spike up. So you need to understand that. It's okay. So looking another one. Okay, not this one. Let's see. Yeah, you can see this one here, rejection, then boom, it spiked down. Okay, okay, let's check another one. There's another one I was looking here. Yeah, this one, you see that? Okay, boom, crashed down. Okay, so this 15 minutes, so you're gonna get those a candlestick more often. So let's switch back forward. Okay, let's see another one. Okay, could also consider this one. Okay, this one, see this, you sell and boom, you are in profit. That's 1-to-1. Just go with 1-to-1 if you want to get more profit, but you can close once it spikes, because you are catching spikes here. Okay, there's another one here also highlighted, but this one didn't close bearish. Can ignore that. Let's see this one. Also this I could consider this more than this one. You see how the market came back, fooling people out, taking their stop losses, and then market come back down. So this one I could consider more than this one. This one has nothing to consider, but this one, after this pullback, came back hitting those stop losses above here, then you see this here, I could consider this, and then market drop nicely. Okay, I can see another one coming in. Can see this one. You see this one, and then boom, the market spike down. That's 1-to-1. You close your trade there before it start moving against you again. Yeah, so those are kind of candlestick rejection you need to check. Yeah, so you can also confirm also the strategy using boom 500 and using boom 1000. Also you can also use crash to test using crash 1000. This video very short. Make sure you like, share and subscribe. Yeah, so I can still go forward, we can still check for the same. So like this one, could also consider this one. Very nice. They also has some small candles. I think we have discussed that. Okay, so let's forward. You can see a small one. Yeah. Okay. Yes. So this rejection candlestick, they play major role. Don't ignore them. They play major role in trading. You can't just, when you see a rejection, it means the price is no longer going up or down. There's something happening. So those rejection, but remember, you can't just trade any rejection. No, that's why you need a strategy, and the strategy is add the Bollinger Band. Once you add the Bollinger Band, whenever that rejection come in on upper the Bollinger Band or below the Bollinger Band, you know exactly that's a nice opportunity to buy or sell. Catch those spikes. Thank you so much, guys. I hope this video will help you on your trading career, how to trade spikes. This is a very new strategy, so more strategies still coming up, and the next one will be how to use RSI 21, level 15 and 85. This one is also another strange strategy to cut those spikes. It also has stop loss and TP level. Thank you so much.